Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had that US inflation data that was last week disappointing again. And what that had done to the Treasury yield curve was to flatten it again. Once more we saw the 2s10 spread falling away and back down towards 80 basis points, which again is sort of shows the lack of faith I think that the market still has in this the Fed's ability to create inflation, certainly at the moment. Now, sort of focus is coming off the US a little bit this week. There's no real US Tier 1 economic data, focusing more on the UK and the Eurozone. We've got some big data out from the UK. You've got inflation, you've got wages growth, and also you've got the retail sales data. So the markets will be looking at that, also the Eurozone in terms of CPI on Tuesday. But Brexit is still a big factor for the UK. Sort of sterling moving sharply around on Brexit last week. Again, we've got Theresa May looking to sort of give her 2 cents worth and sort of moving into having a dinner apparently with the European Union leaders this week to try and sort of get the ball rolling really on the negotiations, which continue to flounder. That has helped, I think, sterling to outperform a little bit on Monday. Sterling is still a Brexit-related trade, I think, and we've seen the dollar coming under a little bit of sort of support, following on from comments from Janet Yellen over the weekend, again sort of insisting that the Fed's going to push ahead, even though inflation remains fairly sort of subdued, I suppose, in the States. Now, in terms of your Forex markets, what we have got is the euro-dollar trade, which is sort of now moving into a bit of a sort of a trading range phase, really. About 400 pips of range it's been in for the last few months, and it's trading around a bit of a pivot at 1820. So watch out for this level. So playing a bit of a role, I think, in the coming days, as it sort of remains a bit of a sort of a level that the market sort of buzzes around. Nothing really doing in terms of the States, as I said, this week, but markets are going to increasingly look towards obviously eurozone inflation, but also now the ECB, which has its monetary policy decision next week on Thursday. Will the ECB start to push ahead with cutting its asset purchases, and that could start to support the euro once again if that were to be seen. So the market's going to increasingly, I think, focus on that. In terms of sterling, as I said, related to Brexit play, but also a lot of this key tier 1 data this week. You've got inflation, which is expected to again push towards 3% on the headline CPI. You've got wages growth. Are wages going to be sort of coming under downside pressure? So this whole negative wage, real negative wage impact on the UK economy. It's a bit of a conundrum for the Bank of England still. And dollar yen continues to drop away, has done in the last sort of week or so, now back below 112.20. That completes a technical top pattern that implies a 111 figure, and that's a key medium-term pivot. Now, it is earnings season, and as US earnings season, again, the banks starting off earnings season relatively positively. Earnings season is going to be a little bit subdued, I think, this time around, only around about 3% at the outset, but that's likely to be ultimately, in terms of earnings growth, end up being around about 6% in due course. But the banks have started off reasonably, but I think this is obviously going to be something that plays out more as the weeks progress. S&P 500 remains strong going into earnings season. DAX has broken out above 13,000. That's interesting. Can it hold on to that break? That's been a bit of a ceiling recently, but it has pushed out above that in the last couple of trading sessions. FTSE 100 looking to within around about 50-60 ticks of its all-time highs again. Now that is interesting because other markets have already broken out. FTSE still struggling. It's up towards momentum sell signal areas with the RSI around about 70 now. So is that going to limit this little recovery? So the key question for equity markets is the momentum in this breakout going to continue? On your commodity markets, the dollar is still a main factor in gold. The dollar weakness is helping to drive gold higher through 1300 to 1310. That is a key pivot throughout this week and ongoing. Now, the oil price has been supported of late. Will it continue to sort of rally into weakness? Certainly the suggestion that, Donald Trump's sort of coming out and denouncing the Iranian sanctions, or certainly sort of questioning whether they should be put back into place, has started to give oil a bit of support again, and obviously the OPEC suggestion that they might even extend the production curbs is always a bit of an underlying support for oil, but interesting support there that we're seeing pushing higher. So basically, in terms of your data this week, we are, as I said, looking mostly towards the UK key tier 1 data, bit of Eurozone data with the CPI and the German ZEW on Tuesday, bit of US housing data with the building starts and the building permits and the housing starts. But generally speaking, we are looking sort of UK based, and lack of key tier 1 US data is a little bit of a factor here for the markets. So I wish you good luck in your trading throughout this week, and I'll speak to you next time. Thank you.